We are one bank all the way in the Gambia that had the opportunity to work hand in gloves with FinTrack. And then prior to that, when the pronouncement was done by the Central Bank of the Gambia, for us to report IFRS compliant figures, for instance, we were struggling to find a vendor that can actually automate the system for us. So our partnership with FinTrack under the leadership, under the excellent stewardship of Mr. Bimbo Aboye, has actually given us the opportunity to compare manual-based approach of credit risk management and even reporting system to really a fully automated one. And we want to thank him and his entire team for this wonderful initiative. Obviously, you know, when you talk about credit, you're looking at, yes, it's all about the underwriting. It's one aspect of it. The recognition and measurement is another bit of it, but the presentation and disclosure of it is also bits of it. So it's becoming more and more and increasingly important that we automate these processes, because underwriting would require data inputs. You are looking at the capacity, the capital contributions, the character of the individual, you know, the seasonality, that's the trend of his borrowing needs, as well as in case it is, and then all these checks and balances are done, what will be the collateral, what will be your fallback on? And in trying to really present record in the first place, recording this will require a system of automation that tracks the credibility of the individual you are trying to give loans to. You know, what are his account turnovers? What are his historical trends? Is he a good lender? Do you have access or an interface with other systems, credit reference bureaus, for instance, that will tell you and inform this on what is his industry-wide exposure? Is this guy someone like me who will borrow from Bank Bimbo to Bank Chinodi to Bank all the Chidozi and borrow from all the banks, and the banks are operating in silos and are not sharing information? What kind of automation is in process to ensure that even at the very beginning of underwriting this debt, there is enough information for the decision makers to go ahead with it? And then how do you really accumulate this information manually? It's almost impossible. So this is where automation is very important. People will be sitting where they are sitting. As we say, Bimbo is all the way away from Nigeria. I am in the Gambia. This is possible because of IT and because of current innovations in the way we do things. Formerly, before the invention of these things, I would have bought a ticket, be inconvenient on an airplane, it's costly, you know, and then go there, get some harassment at the airport, and then so many other things. But now this is the beauty of IT that we are talking about. Automating. Directors can be diverse, can sit wherever they are, and will still have what we call a credit facility request. The credit facility request, you can give it any name, but all it does is the analysis that the analysts are doing to present it to credit committee to appeal to those who are actually approving that this is a customer who has checked all the boxes. And then that's just for the underwriting bit. And then you cannot underestimate the level of automation that should be involved in sharing this valuable information. And then in coming to the recording, you know, one needs to know, how do I recognize this? Because in your core banking application or the nominal one, the customer, when he comes, he wants to see a statement based on the interest rate that you have agreed with him and all these other things. So that's the banking book, the core banking application. But the reporting, now where you come to IFRS 17, which is financial instrument disclosures, or you go to IFRS, sorry, 7 rather, 17 is leases, it's insurance. But again, I'm sure there are insurers among us, so they'll be very interested in this automation process. But IFRS 9, most importantly, you know, when you come to measure these things, the expected credit losses, you know, the exposure at default, the loss, the probabilities of default, the loss given defaults, these are heavy data that you cannot do manually. You cannot do by tracking in Excel. You cannot do by crunching figures on a T table. No, it has to be automated for decision making. And I think once that is done, it improves a lot of the confidence that you have, first of all, with the auditors that are auditing you and how they put forward their opinion on effective interest rates. Come on, to track the arrangement fees and get an effective interest rate manually, it's unbelievable. We tried it before FinTrack came to our rescue, and it was rocket science. In fact, some of us were falling sick already trying to have this in our brain. We were lucky that it didn't explode. But basically, improved accuracy. your investors, your stakeholders, your directors, everyone involved in the decision-making process and in the analysis of how well your company is doing. It's important that you give them accurate, up-to-date information, which can only be done through automation. Improved financial reporting. Beyond everything, when you underwrite well, you recognize well, you want to ensure you report it in accordance with international financial reporting standards. That's key. You can't do that manually. It must be automated. Increase efficiency. At the end of the day, before you spend 10, 20 hours trying to come up with models that will lead to some brain tumors, you click a button and it does the models for you. So that you can imagine how much time it will save, how much cost it will save, the level of accuracy, the best shot you are giving it at, and so on and so forth. To be very honest, I see no reason why anybody shouldn't go automated on credit terms. And I don't see how a big bank or even a smaller microfinance institution can sustain a credit growth, consistent credit growth, without automating its systems.
Subscribe to our YouTube channel.